Hi, it's Lori Richardson with Cornerstone Home Lending on Monday, February 6th. Just wanted to give you a quick look at the markets. Last week, we saw mixed news and economic data that really had offsetting impact for mortgage interest rates in general. Investors viewed last Wednesday's Fed meeting as favorable for bonds, however, and we saw rates end the week just a little bit lower. Today, we're going to dig in a little bit to the Fed meeting, talk a little bit about housing data and what to expect this week. So let's start with the Fed meeting. Last week's Fed meeting brought no surprises as the Fed voted unanimously not to raise rates, as I'm sure you've heard by now. Most of their statement really was cut and paste from the previous months, including the fact that they gave no guidance on the pace of future rate hikes. There were a couple of key differences that I wanted to highlight. The first of which is that they did express more concern over inflation, saying that it has risen in recent quarters and it will reach 2%. So this is different and stronger verbiage than they've used before, and as we have talked about in previous weeks, it's really all about the words that they say that give us some insight into their mindset. The other thing that we have been watching carefully is the reinvestment of their current holdings into mortgage-backed securities and treasuries. As we mentioned last week, they are currently reinvesting at a rate of, or at an amount of $9 billion per week, and they mentioned that they are not looking at changing that strategy for the foreseeable future as it stands right now. So the statement overall was positive for mortgage interest rates and helped them move lower toward the end of the week. And here's a quick look at housing data. The Case-Shiller Home Price Index, which measures or tracks the changes in the value of residential real estate across the country, showed that home prices in November continued to accelerate. Overall, we saw an increase of 5.6% year over year as a nation. And the thing I really wanted to highlight was in the 20-city composite index, Denver continues to share the top 3 spots along with Seattle and Portland, with an 8.7% year over year increase in value. So we are still leading the nation with regard to home price appreciation. Now, while these numbers reflect the time before we saw the increase in rates, it's important to remember that it's not the pace of sales, but it reflects the appreciation of home prices year over year. Recent reports, as I'm sure you hear, just like we do, buyer demand is increasingly strong, but we've got very low inventory or low supply of homes for sale. So that points to an even stronger appreciation growth until we can see that demand and supply level out a little bit. So if you are thinking about selling your home, it is a great time to do it. This week we will see the JOLTS report, which measures job openings and labor turnover rates, come out on Tuesday, and then on Friday we will see consumer sentiment. So as always, give us a call, let us know how we can be helpful. Rates are still great. If there are any questions we can answer for you, please reach out, 720-200-6868. Make it a great day.